Have you ever wondered what the real secret is to building serious wealth? For generations, the big debate has been stocks versus real estate. It's the classic showdown, Wall Street wizards versus property moguls. So, which one is actually the better path for you? Let's break it down, cut through the noise, and figure out what actually builds wealth faster. First up, let's talk about stocks. When you buy a stock, you're buying a tiny piece of a company like Apple, Amazon, or Tesla. The beauty of stocks is how easy it is to get started. You can open a brokerage account on your phone and buy a share for just a few dollars. This is what we call low barrier to entry. You don't need a massive down payment or a bank loan to get in the game. Another huge advantage is liquidity. What does that mean? It means you can sell your stocks and get your cash back almost instantly, usually within a few days. If you suddenly need money for an emergency, you can access it quickly. Try doing that with a house. And let's not forget about diversification. You can easily spread your money across hundreds or even thousands of different companies, industries, and countries. This is super important because if one company or sector is having a bad year, your entire portfolio isn't wiped out. Think about it. You can own a piece of tech, healthcare, energy, and more, all with a few clicks. That's powerful risk management right there. Historically, the stock market has delivered impressive returns. Over the long term, the S&P 500, which is a collection of 500 of the largest U.S. companies, has averaged around a 10% annual return. Thanks to the magic of compound interest, where your earnings start earning their own earnings, that 10% can grow into a massive sum over time. Imagine starting with a small investment and watching it snowball year after year. That's the power of the stock market. But it's not all sunshine and rainbows. The stock market can be incredibly volatile. One day it's up, the next it's down. Watching your portfolio values swing wildly can be a real emotional roller coaster, and it takes a strong stomach to ride it out without panic selling at the worst possible time. It's a hands-off investment in one sense, but it requires serious emotional discipline. Now, let's shift gears and talk about real estate. This is the tangible asset. You can touch it, see it, and live in it. When you buy a property, you're buying a physical piece of land and a building. For many people, this feels more secure and real than owning digital shares of a company. The biggest superpower of real estate is leverage. This is a game changer. Leverage means you can use other people's money, mainly the banks, to buy a much larger asset than you could afford on your own. For example, with a 20% down payment, you can buy a property that's 5 times the value of your initial investment. So, let's say you buy a $500,000 house with a $100,000 down payment. Real estate also generates cash flow. If you're renting out your property, the monthly rent your tenants pay can cover your mortgage, taxes, insurance, and other expenses. Whatever is left over is pure profit in your pocket every single month. This creates a steady, predictable stream of passive income, which is the dream for many investors. While some stocks pay dividends, they rarely match the potential cash flow from a good rental property. And don't forget the tax benefits. As a real estate investor, you can deduct all sorts of expenses, like mortgage interest, property taxes, maintenance costs, and even depreciation, which is a paper loss that can significantly lower your taxable income. These tax advantages can be a huge boost to your overall returns. Of course, real estate has its downsides too. The barrier to entry is high. You typically need a hefty down payment, closing costs, and a good credit score to even qualify for a loan. It's a significant financial commitment. It's also highly illiquid. Selling a house isn't like selling a stock. It can take months, and there are significant costs involved, like agent commissions and closing costs. If you need cash fast, real estate is not your friend. And let's be real, being a landlord is not a passive job. It's an active business. You have to find tenants, deal with repairs, handle late-night calls about a broken toilet, the dreaded toilets, tenants, and termites. It requires time, effort, and management skills. You can hire a property manager, but that will eat into your profits. So, who wins the race? Stocks or real estate? The truth is, it's not about which one is better, but which one is better for you. If you're someone who wants a simple hands-off approach, has a long-term mindset, and can handle market volatility without losing sleep, stocks might be your ideal path. You can start small, diversify easily, and let compound interest work its magic over decades. It's the classic set-it-and-forget-it strategy, if you have the discipline. On the other hand, if you're more of a hands-on person, enjoy finding deals, and are willing to put in the work to manage a property, real estate could be your ticket to wealth. The ability to use leverage, generate monthly cash flow, and take advantage of tax benefits can accelerate your wealth-building journey in a way that stocks can't. You have more control, but also more responsibility. But here's the real pro tip. Why choose? The wealthiest people don't put all their eggs in one basket. They do both. They build a diversified portfolio of stocks and ETFs for long-term passive growth, and they use real estate to generate cash flow and build equity with leverage. Imagine this. You use the cash flow from your rental properties to invest more money into the stock market, or you use a portion of your stock market gains as a down payment for your next property. This is how you create a powerful, self-sustaining, wealth-building machine. You let your assets work together, each playing to its strengths. So, the question isn't stocks versus real estate. The real question is, how can I use both stocks and real estate to achieve my financial goals? Start by educating yourself. Read books, listen to podcasts, watch videos like this one. Understand your own risk tolerance, your financial situation, and how much time you're willing to commit. Maybe you start with a low-cost index fund to get your feet wet in the market. Then, as you save and learn more, you can start looking for your first investment property. There's no single magic formula. Your path to wealth will be unique to you. The most important thing is to start. Don't get stuck in analysis paralysis, debating which path is perfect. Just take that first step. Whether it's buying your first share of stock or starting to save for that down payment, the journey of 1,000 miles begins with a single step. What do you think? Are you on team stock or team real estate? Or are you, like me, on team both? Let me know in the comments below. I'd love to hear your thoughts and experiences. And if you found this video helpful, make sure to hit that like button and subscribe for more content on building wealth and achieving financial freedom. Thanks for watching Passive to Powerful channel, and I'll see you in the next one.